Okay, good afternoon. Today, I've got one very important investment myth that I want to dispel for you. And this applies due to the fact that we are starting a new year, right? We are starting 2021. And I want to help you get to your financial goals as soon and as reasonably fast as we can. So, what I want to do is I want to go over this investment myth. It's very prevalent and it may garner a little bit of controversy here, which I always welcome in discussions, and that is that the United States is the best place to invest your money. That isn't always necessarily true. And the reason why this is an important myth to dispel is because you never want to have all of your money invested in one country. Even though the United States has done very well over a long period of time, and it will probably continue to do well, you don't want to have all your money in one country. So, for those that follow the markets, you'll notice that recently, over the last few weeks, the foreign or outside of the United States markets, so even the developed foreign markets and the emerging markets, have been outperforming the U.S. stock market. So their stock markets, in total, right, in totality, have been outperforming the U.S. stock market. And this isn't anything that should be odd, right? This is something that actually happens over periods of time. And the reason why I want to bring this up is because there is a prevalent myth that the United States is the safest place, the best place to invest your money because of the full faith and credit of the US government. There's a lot of faith that people put in the US government backstopping any decline in the stock market. And as a result, America is the safest place and you get the best returns there. Here's the problem with that theory. The US has performed better on average than other countries over a long period of time. We talk over 100 years. However, trends take place over long periods of time. And I'm going to use a very simple example here. In the 19th century, the United Kingdom or Great Britain had a stock market that was outperforming the US stock market. And it lasted for a very long period of time, for close to 100 years. Now, the data that we have from the 19th century isn't as reliable as what we have today in the 20th and the 21st century. However, in the 19th century, if you had invested in British stocks at that time, over that 100-year period, from about 1829 to 1929, so a little bit into the 20th century, you would have done about a 5% real return per year, right? That's an annualized return, and that's a real return. That is adjusted for inflation. Now, in those days, inflation wasn't as high as it is today worldwide because the world was on the gold standard at that time. So the inflation rate was pretty flat, and it averaged less than 1% a year during that period of time. Now, during the 19th century, there was a lot of booms and busts, right? So there was a lot of increases in prices and then decreases. There was a lot of volatility. But over that time, if you took the average stayed about the same. Whereas in the 20th century and in the 21st century, we've had a lot more sustained inflation. So during the 19th century, we had an inflation rate of really less than 0.5% per year, whereas that average has been between 3 and 4% per year during the 20th and the 21st centuries. Why is this important? During the 20th century, we've had the US market perform about 9% a year, right? The S&P 500 did about 9%, whereas the inflation rate was about 3%. So that was about a real return of 6% a year. Whereas if you had been invested in British stocks, they did a 7% return, the FTSE 100, over that same 100 years, but their inflation rate was closer to 4%. So you're really looking at only maybe a 3% return. Obviously, 6% in the US was much better than 3% in the UK. But if you'd been someone who understood the history of the 19th century, maybe had lived through some of it, you would look at the 20th century and say, well, gosh, Great Britain has done great for 100 years. I need to put my money in British stocks. Let's not think about US stocks, right? And US stocks in the 19th century did not keep pace with British. On average, they did maybe 3 or 4% a year, voice that great 5% a year that British stocks were doing. So I'm not going to put my money in America. Yet if you'd done that, you would have made a big mistake. The same applies today. We cannot look back over a long period of time and say, well, that's going to continue, because it doesn't necessarily continue. Another example is Japan, right? The Japan stock market peaked at around 40,000 in 1989, and it still has not come back to that high. And their economy has still been in, flirting with recession over a period of over 30 years. So when we look at something, we say the past does not equal the future, or past performance does not guarantee future results. That should be taken on board, especially when looking at investing. Now, I'm not saying that you shouldn't invest in US stocks. That's not the message I'm giving you here. I'm saying you need to be properly diversified. And the recent decoupling that we've seen between foreign stock markets and the US stock market is potentially a harbinger for what's going to come in the next 10 years, which is emerging markets may significantly outperform the US market. So it's a good idea to have some of your money in those markets too. Please post a question or comment. Send me a private message if you want to talk about it privately. It's a complicated topic. There's a lot of history involved, but I want to make sure you're well educated when it comes to this. The myth that you need to have all of your money in the US because it's the safest place to invest is inaccurate. And you need to be well diversified if you want to get to your goals as soon as possible, right? It's achieving those goals with the minimum amount of risk. If you want to take greater risk, you can concentrate your money, but it's not a good idea to do that if you want to make sure that you're achieving your goals with the minimum amount of risk. Again, please post a question or a comment. Send me a private message if you want to talk about it privately. And until next time, I wish you unlimited success.